Welcome to our presentation on Insurance Basics, the quick and easy version, part 2, brought to you by rebelcapitalist.com. This is the quick and easy version because we are going to quickly talk about insurance, types of insurance that are available to people today. Let's go over what we're going to cover today, Insurance Basics, part 2. We're going to cover health insurance and Medicare. Probably two of the most important insurance policies that a person can have. Okay, let's turn to health insurance. There are three types of coverage in a health insurance policy. There's hospital insurance, surgical insurance, and physician expense insurance. The basic health insurance policy includes some combination of these three types of coverage. And you could add policy options. There are policy options to a health insurance policy, such as a prescription option or a dental option, but these can add to the cost of a policy. There are several types of health insurance policies. The first one we will cover is fee-for-service policy. This is where a doctor or hospital will bill the insured directly, and the insured will pay the bill and then turn around and seek reimbursement from the insurance company. There are typically co-insurance requirements with such a policy. Co-insurance is where there is a limit to the amount that the insurance company will cover, such as 60% or 80% of the medical expenses. And oftentimes there's also a co-payment. This is where the insured has to pay a certain amount of money first before the insurance pays. Next type of policy is the managed healthcare policy, or typically an HMO or health maintenance organization. This is where most of the insured's expenses are covered. I say most because they rarely cover 100%. You may be limited, a patient or insured may be limited to a specific number of doctors or hospitals. And the distinguishing aspect of a managed healthcare policy versus a fee-for-service policy is that there's no reimbursement needed. The HMO the hospital doctor will bill the HMO directly. And there's another type of managed healthcare, and that's a PPO, or Preferred Provider Organization. This is kind of a combination of the fee-for-service and a managed healthcare, where the PPO actually negotiates prices for medical services with doctors and hospitals. Let's cover some more on health insurance. You have different types. You have there's group health insurance policy, much like the life insurance policy, and then you have the individual health insurance. You also have something that is relatively new, and it was created by federal law, is the flexible spending accounts or medical reimbursement accounts. This is where an employer allows employee to save pre-tax dollars in an account that can be used to cover unreimbursed medical costs, including dental and qualified child care. Now, there is one drawback to these medical reimbursement accounts, and that is if you don't use it by the end of the year, that money is gone. You kiss it goodbye. Medicare. The Medicare is a very difficult topic. We're going to try and just cover some of the main points of Medicare. Medicare is a government health insurance program that covers people ages 65 or older, and people with certain disabilities, and people with end-stage renal disease. The insurance cost depends on the coverage and the services that are needed. And Medicare is divided into parts: Part A, Part B, Part C, and Part D. Let's start with Part A. Medicare Part A is the basic coverage. It's compulsory. This means that if you apply for Medicare, Medicare, you have no choice. This is what you're going to get. It covers inpatient hospital expenses and skilled nursing facilities, but it does not cover long-term care. Part B, Medicare Part B, is voluntary, meaning this is something that a person can pay for. This is an additional coverage that a person can pay for. It does require a monthly premium, an annual deductible, and there is coinsurance. Medicare will cover 80% of medical services, such as outpatient care and some of the other medical services that Part A doesn't cover. Part C. Medicare Part C is also known as Medicare Advantage. It is offered by HMOs or PPOs. It covers Part A and Part B costs, and some offer prescription coverage. This is this is offered by private companies or HMOs or PPOs. There are co-pays, deductibles, and co-insurance, and oftentimes a person may have to pay a monthly premium because of the amount of coverage that Medicare Advantage provides. Then there's Part D. Part D is prescription coverage, and it's also offered by private companies. There are monthly premiums, co-pays, and in some cases, deductibles. We're almost done with Medicare, so bear with me. There is a product known as Medicare Supplemental Insurance, also known as Medigap, and it's also offered by private companies. This supplements Medicare coverage, and it typically covers expenses not covered by Medicare. The premium is based on the insured's age, and this is very important. This coverage is not needed if a person has Medicare Part C. That concludes our presentation on Insurance Basics, the Quick and Easy version Part 2. Thank you for your attention. That was a lot of material. We hope you learned something from it. Please visit us at rebelcapitalist.com. Good day and good luck.